Life all comes down to a few moments.
This is one of them. Sheen was kind of a pimp.
No, shut up, man. Listen, Gecko's coming out. What's going on? I'm looking at 200,000 shares move, pal. I want to know if we're part of it. Well, better be, or I'm going to come down and eat your lunch for you. Back in two, Alex.
I loved it at 40. 50, it's an insult. They're analysts, they don't know preferred stock from livestock. So wait till it goes down and I come up and firm count, blah, blah, blah.
This is a kid. Calls me 59 days in a row, wants to be a player. Ought to be a picture of you in the dictionary under consistent, kid. Yeah. Now listen, Jerry, I'm looking for negative 12, okay? No more than 35%. Just enough to block anybody else's merger plans and find out from the inside if the books are cooked. Looks as good on paper. We're in the kill zone, pal. Lock and load. Lunch? Oh, you're gonna be kidding. Lunch for whips. Okay, if you don't, I'll talk to you.
How do you do? So you say nice to meet you. Hope you're intelligent. Where'd you get these? I got a connection at the airport. Nice job, Mr. Clean.
What's going on, everybody? This is your boy Christian Israel, and you are tuning in to the New Creation Capital Podcast, a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. This is a new you, a new future, and a new creation, guys. Happy Monday. Happy Monday. Today is April 13th, 2020. I hope you all had an amazing Easter. He has risen, guys. Thank you for tuning in to the podcast. Thank you to everybody who has hit us up on our Twitter at New Creation Capital and conversing with us. And of course, those of you guys that have been following us on YouTube. 2 weeks ago, we had 0 subscribers. Now we are at 21. Thank you to those subscribers. Thank you to you guys following along. Make sure you hit that little notification bell and do the social media thing. And of course, for those of you who are listening, you're either listening to us on Apple Podcasts, Breaker, Google Podcasts, Pocket Cast, Radio Public, Spotify, and of course, the Anchor platform. Thank you to all those who have supported us and partnered with us, as well as messaged with us today. And of course, those of you guys that know, you can find us on the publish0x.com cryptocurrency blog website. Those of you that want a voice about cryptocurrency or want to search things in cryptocurrency, you can find us right here, right now, all day, every day. Let's go and jump into today's story, which is about the banks. On April 8th, we did episode 16, which is about Are the Banks the Big Short? Part 2. That was the question. Today, we're going to dive into what is going on with the banks this week. But before we go there, let's dive into the cryptocurrency market and see what is going on today. Over the last 24 hours, Bitcoin is down 3.3%, sitting currently at 68.21. Ethereum is down 8.7%, currently sitting at 156.50. And of course, the top coming in at number 3, XRP, down 1.7% at 18.8%. Now let's check and see what is going on in the market. Did I close that link already? I have already closed that link, but that's okay. We saw that oil market was down, even though we had the OPEC search yesterday. Also saw that the Dow was down 300%. And so forth. Actually, you know what? Here's what we're going to do. We're going to go ahead and look. There we go. Bada boom, bada bang. The Dow is down 1.39%, sitting at 23,390. The S&P is down 1%, sitting at 2761. The NASDAQ, which is the banks, are up 0.48%, sitting at 8192. The gold market is up 0.46%, still making that move. Peter Schiff is happy, sitting at 1760. Oil is down 1.54%, sitting at 22.41. Okay. So before we go into the story of the day, we're going to touch on this topic right here about the stimulus checks. Are they arriving on schedule? Why are people complaining? Not really so much why complaining. I'm just going to show you how to actually get your stimulus checks, okay? So when you go to an article right here, I found this one right here talking about Americans start to see relief payments, some face a wait. This is from April 13th, today, written by Sarah Skidmore-Sell of the AP. She writes, Americans are beginning to see the first economic impact payments hit their bank accounts. So that's good. Some of you guys are getting paid. Are you guys getting paid? Have you started getting paid yet? Are you expecting to get paid at all? Let me know in the comments section. Let me know what you think about that, okay? We see here, man, I'm getting all types of notifications. We see here that the IRS tweeted out on Saturday, as the first economic impact payments start being issued next week, which is this week, the IRS will launch a tool that provides taxpayers the status of a payment, including the date it's scheduled to be deposited or mailed. So the IRS gave us a website called the irs.gov, and it looks like this. The irs.gov page, you can be a non-filer, enter your payment info here, or the coronavirus tax relief, get the information based on what your tax record looks like, make a payment, view your account, do your tax for free, or just get the status of your refund. Me, I keep trying to give them this is personal, I filed my taxes, but I didn't expect a tax refund this year, so I gave them my checking by filling out the non-filers payment info here. I filled it out, I went to this website, who's eligible, I went ahead and clicked on non-filers, just to go ahead and get it because I didn't expect them to actually do it. I went here, tried to give my information. It didn't help. So I went back because I filed my taxes. I went back to there, entered get Corona's tax relief, tried to enter my payment information, otherwise my check and my routing number. For some reason, it's not working. So I'll have to see what's going on from there. I don't know what's going on, but for you guys, hopefully it works out for you. Let me know what you think. Let me know what you got going on. So this is my third time doing this video. I'm going to try to find the spot that I found in this video before. I believe it might be around that spot. But anyway, this is an article by finance.yahoo.com written by Imani Mose and David Henry today. And it's talking about trading gains for big U.S. banks may not last past the first quarter. Okay, so we saw that the NASDAQ is up, and it's been moving, but I don't think that's going to last. I think you saw all this money going into the stock market, which is really going into the banks, and that banks below it are going to fail because people are not going to pay back their debt. But how can the banks fail if something keeps saving them? So there's a gentleman here that talks about what he believes the the Federal Reserve is. The Federal Reserve is basically our central banks, and here's what he talks about. So I want you to listen to this gentleman talk this morning on an interview, and I think I found the right spot.
Of feeding the liquidity pump from the but there is a moral hazard to the fire, and it wasn't a balancing act with the Fed.
The bond market, including now going to be buying up municipal bonds and corporate bonds, things they've never done before. How is that going to reshape the bond market going forward when we come out the other side of this pandemic?
Yeah, it's going to be a real balancing act with the Fed. I like to think of the Fed as the fire department. When the house starts to burn down, they need to show up and put out the fire. And I think what they learned from 2007, 8, 9 was they were tardy in showing up to the fire, and it wasn't until Lehman failed that they came in with all of their resources. They've been much quicker to act this time. They've acted in a much larger fashion than they did the last time. But there is a moral hazard. The Fed is the liquidity provider of last resort, and they've come up with some very innovative programs that are, I think, designed well in terms of feeding the liquidity pump from the top, but not trying to be in a position where they're picking winners and losers.
So basically, he just said the Fed is going to give the top money, right? Giving all of the banks on the top their money, buying out the bonds, buying out the junk debt that's not going to be paid back. And they're not going to pick the winners and losers. So if Fed's not going to do it, who's going to do it? It's going to be the banks. So the bank's going to let the little people fail. And the little people are responsible for who? The little people are responsible for giving the money to the people in the communities. Okay? So giving them through. So if the banks are getting money from the Fed or the central governments of the countries, right? The central banks are getting money from their governments to give to the people. How is that going? How are the small business loans going? Well, we talked a little bit about UK last week. We talked about how the UK, how they believe one out of every 5 businesses are going to fail because the small and medium entrepreneurial loans aren't being given out on time. Well, I've came across another article today written in the Moscow Times, and it's titled, Russian Banks Reject Most Applicants for emergency coronavirus loans. Lenders slow to approve interest-free salary loans while consumers face frequent rejections for loans not covered by government schemes. Now, this young lady right here is Elva. She is actually the governor of Russia's central bank. And here's the part of the article I want to read to you today. It says, Russian banks are failing to approve the majority of appeals for financial support from consumers and businesses seeking emergency funding under government schemes to ease economic damage stemming from the coronavirus, the central bank has confirmed. Central Bank Governor Elvira, I won't try the last name, said Friday, take up cheap loans and repayment holidays for distressed companies and individuals has gotten off to a slow start. Stressing that central banks expect banks to increase approval rates for those applying under government incentives. We keep hearing that same language, slow start. We'll see that some more here in the next article. The central bank said 900 companies have applied for a total of 6 billion rubles, 81 million, in interest-free loans to cover staff salaries and a scheme where the government would subsidize banks to cover the cost of cheap lending. As of Friday, this past Friday, Good Friday, just 76 million rubles, which is $1 million equivalent, had been approved, equivalent to 1.2%. So out of all the businesses applied for, 1.2% has gotten it. That's Russia. Well, that can't be happening in America, right? Not at all. Well, let's see what's going on in America. There's an article that came out on April 7th by Liz Zhao of Vox.com, and it's titled, Many Small Businesses Are Being Shut Out of a New Loan Program by Major Banks. What? Doesn't that sound exactly like what we just read in Russia? It says, after the launch of the PPP, the Payment Protection Program, some businesses are just trying to find a lender that will consider their application. All right, so it can't be the same thing, right? Let's dig a little bit here. So we see here, the Payment Protection Program, a new effort intended to help small businesses combat the economic fallout from coronavirus, is working through technical snafus and confusion about available lenders and questions about costs its loans will cover, all of which had made the application process more challenging. Technical snafus. There's that word again. Technical snafus and confusion. Hold on. What was this again in the government here? A slow start, right here. Slow start. Stressing. Yep, slow start. Technical issues, only 1%. Same thing happening in America. That's interesting, right? But of course, we have Mark Rubio who will say this. Mark Rubio, who is a senator from Republican of Florida, of the Small Business Committee, says when you launch something this unprecedented and far-reaching, just 7 days after it becomes law, there will be inevitability be problems. Rubio said in a statement this weekend, the good news is that every problem we saw can be fixed. It can be fixed, but tell me about this. Can this one be fixed? This is a tweet by KC Bug, okay, at DRKC Bug. And he tweets here, just another small business owner screwed by at Bank of America. 13 years of doing business with Bank of America ends today. Denied application because of no line of credit with them. All the 30 other banks I've contacted are serving their customers. Now, if he's contacting 30 other banks, guess what they are? They are small community banks. There's not 30 major banks. There's only 5 major banks. And here he goes in to talk about it says why he didn't qualify. He doesn't qualify. Not denied, but technically not qualified, right? It says here, small business leading lender relationship must include a credit card. You have to have a line of credit in order for them to do it. You have to have a line of credit. Okay? That's the point. But we see here, here's something by Capital One by at Steve Mnuchin. It says here, Representative Don Beyer tweeted yesterday at Steve Mnuchin 1 stood at the White House podium and assured American small business owners that the Paycheck Protection Program will be up and running tomorrow. Here's what small business owners are looking at right now when they get their PP loans from the banks. This is from Capital One. Capital One, it says here, Capital One is awaiting updated guideline applications from the Small Business Administration and the Department of Treasury. Thus, we cannot be accepting applications for PPP at this time. So, they're not accepting it. right? Doesn't that sound a lot like there's the Bank of America one, right? Doesn't it sound like a lot what's going on in Russia? Here's some stats for you. There are 30 million small businesses in the U.S., and the funds that are dedicated to the PPP and the recent stimulus package don't seem nearly enough, as Kudlow's statements on Tuesday indicated that 200,000 loans have been processed so far. What do you think that percentage is? What do you think that is? 300 million, 2%? I don't know, around 2%? That's what it sounds like to me. Same amount of percentages going on there. So I will put more. I won't break all this down. I will put this, of course, in the description. Let's move on to the next. Here we go. So, of course, we're talking about the banks being bailed out. We're talking about the people and the businesses not. But let's see what, there's a gentleman here who is the founder of NorthmanTrader.com. He basically is a trader. He does a lot of market service. So it's at Northman Trader by Seven Heinrich. He says here, on Friday they saved the banks. On Sunday they saved the oil companies. Now 17 million unemployed can celebrate. Yay! Interesting, right? So what's going on here with JP Morgan? There's some news going on with JP Morgan here. I found an article on payments.com, PYMNTS.com, and it's titled, from yesterday, April 12th, JP Morgan and Chase to require 700 credit score and 20% down for new mortgages. The article goes on to say JP Morgan Chase is attempting to stave off the oncoming economic downturn by raising the standards on who can borrow for them for the time being. The new standards, it says here, the new standards will make it so customers applying for new mortgage will need a credit score of 700 or higher and will make a down payment of 20% of the home's values. JP Morgan didn't release its current rates, but the average down payment according to the Mortgage Banking Association is around 10%. So they're going to increase their credit score of 700 and double the down payment. Woo! But it says that the new standards only apply to new applicants, those who are currently have a mortgage through the bank. Not those who currently have a mortgage through the bank. The standards also won't apply to lower income applicants who use the Dream Maker project, which only requires a credit score of 620 and 3% down payment. If you know about the Dream Maker project, I do believe, let me know in the comments if I'm wrong, but Fannie Mae and Freddie Mac are behind that. And on January 1st, 2021, excuse me, in 2021, that whole Dream Maker Act is about to go down because the government stops backing it. So just saying, and not to mention, JP Morgan has been saying that this is going to crash and this is going to be worse than we ever believe. The Federal Reserve March Consumer Survey had the prospect growth of housing at 1.32% this year, the lowest number since 2013. They believe that home sales could fall around 10% because of the pandemic. So you think it's because of the pandemic or because they're trying to take people's money? 30% down or 20% down for new mortgages? That's double. That's crazy. Anyway, what's going on more in the banks in Europe? So let's check out Germany now. This is from news.bitcoin.com. This was written yesterday afternoon by Kevin Helms. And it's titled, 80 Banks Charge Negative Interest Rates as Crisis Deepens in Germany. Amid the corona pandemic and deepening financial crisis, the number of banks charging customers negative interest rates in Germany has accelerated. At least 80 banks now reportedly charge negative interest rates, 16 which apply this policy to even small deposits. So 80 banks are starting to charge their customers to keep their money in their banks, even if it's a small deposit. Even if it's a small deposit. It also says here, the Germany banking sector is facing a tough time, explains about COVID-19 while they're doing it. And there's something down here that I want to touch on. Here we go. The ECB has held its margin deposit rate as a historic low of 0.05%. So they started doing this in 2014, doing their customers. Due to a court ruling, they couldn't apply negative rates to new customers, or can only apply negative rates to new customers, not existing ones. By the way, do you know how many new customers getting ready to happen with the stimulus check? People that are unbanked are now going to be a part of the banking system. That's crazy. Just know that you're now being charged to put your money in the bank. Shout out to Germany's banks. Shout out to the EU. What's going on in the banking system? They're now charging you to keep your money there. That brings me to the interview here by Mark Cuban. Mark Cuban was on CNBC this morning. He did an interview this morning, 7 o'clock this morning, and it's titled, Mark Cuban Banks Are Playing Games on Loans, Leaving Small Businesses Out of the Cold. Okay, so if you don't know who Mark Cuban is one of the big guys in the show Shark Tank. I'm sure you guys have seen. He's also the owner of the Dallas Mavericks basketball team. He made his money during the internet era. Okay, so let's see what he has to say about the bank, shall we?
When I was talking to Treasury, the whole idea was, a little bit of ready, fire, aim. This isn't going to be perfect, but we're telling the banks that, they can authorize loans that they otherwise would not authorize, and the Treasury will guarantee them. And the idea was that all this would be handled very quickly, if not smoothly. Unfortunately, that's not what has happened. Banks are playing themselves. They're being banks, and they're trying to determine if the credits are good. And that's leading to a lot of small businesses that are left out in the cold. I mean, my Shark Tank company is talking to a lot of them. Banks don't understand the affiliate rules because the affiliate rules have not been clarified by the Treasury. And so if a small company has an investor with more than a 20% interest that owns other companies, then those companies are being put to the back of the line, which has really hurt my Shark Tank companies. And in those cases, I basically told them, we'll reduce my equity to under 20% just to get you through this. I've had other instances where they said, well, your gross margins aren't good enough. We're uncertain, and I've tried to call the banks and say, no, that's not the point behind the PPP loans. This is not about that. This is a guarantee by the government, and this is supposed to turn into a grant if you retain all your employees. And so, you have banks that have implemented all these hurdles, and that's just not the way it was supposed to be. And so, until we get through that friction, there's going to be a lot of issues, and there's going to be a lot of people laid off, and a lot of companies that go out of business. Now, hopefully, this is kind of a reframing of what happened with healthcare.gov, and it turned out to be tough at the beginning, and then it got smoothed out, and hopefully it'll be the same way here, that we'll get another tranche of money, and the second tranche will have clear rules, and banks will recognize that this is not a typical credit environment where you're supposed to analyze each application as if it was a new loan, but this is a hurry up environment where we need to get money in small businesses' hands so that they can retain their employees.
So there you heard Mark Cuban right there basically say it's a disaster. And he works with small businesses. It's a disaster right now. Point blank period. Every single bank is trying to find a reason not to give out the loans when their job is supposed to hit, accept, and go. The banks are supposed to be pushing these out. If someone applies for it, they're supposed to get it. Period. Point blank. The banks are saying no. They want to get money. Oh, you don't have enough of this. You don't have enough of this. Banks are being banks. Mark Cuban, did you hear him say more businesses are going to shut down? More people are going to lose their money. The banks are a joke. What do you think? Is Mark Cuban right? I mean, he works. His job is as an entrepreneur. He's a capital venture. He's an investment, an angel investor in a lot of these businesses out there. So his job is to push these guys. He's on the phone with the banks. The banks are telling a billionaire, no, the company you invest in doesn't have enough. The banks don't. The banks are literally keeping the money the government has given them. The banks are keeping the money the government is giving them. And I think that's insane. And so I want to play for you. I forgot the original guy too, but this comes from CNBC, and this is by Shapa, last guy. Anyway, he's the CEO of Social Capital. He is a billionaire, and here's what he says. And this isn't about the small business. This is about the big businesses. And I want you to take a listen to what this guy says.
But are you suggesting, you keep saying propping up zombie companies. Are you arguing to let airlines, for example, fail?
Yes.
Why? I mean, how does that make sense in the broader scheme of the economy?
Because when you look at what it means, this is why I'm saying, this is a lie that's been purported by Wall Street. When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt, or the folks that own the equity, And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out. The pensions don't typically get wiped out.
Why does anybody, I just understand, why does anybody deserve, using your word, to get wiped out from a crisis created like this? How does anybody deserve to get wiped out?
But just be clear, like, who are we talking about? We're talking about a hedge fund that serves a bunch of billionaire family offices? Who cares? Let them get wiped out. Who cares? They don't get the summer in the Hamptons? Who cares?
I mean, there are people, you don't think the employees,
hold on, Scott.
You don't think the employees of these companies own stocks? I mean, own their stocks, own the company's stocks?
You can look on Bloomberg and you can see what percentage of these companies are typically owned by. These things are owned by BlackRock. These things are owned by these huge, amorphous organizations. Ultimately, downstream, and the employee owns a few $100s or a few $1,000s of shares.
I just don't understand. So this is like a natural disaster. Why does anybody deserve to get wiped out? Wouldn't that be immoral in and of itself?
No, because what's happening right now is what I'll tell you is on Main Street today, people are getting wiped out. And right now, rich CEOs are not, boards that had horrible governance are not, hedge funds are not, people are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make, my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect, poor performing CEOs, companies, and boards. And you have to wash these people out.
I couldn't have said it better myself there. He's basically saying, right, the banks are getting bailed out, the big businesses are getting bailed out, the airlines are getting bailed out, but we see here the small businesses, nope, we're not giving you any money. The people, nope, you get your measly $1,200, shut up and go away. But the banks are keeping the money that is being given to them. Yeah, we're an investment company, and it's our job to invest and pay attention. Our company saw the stock market. I told everyone who invests in the stock market that definitely knows me or our company in January at the top of the year to remove your money from the stock market. Do it. Most people listen to us. The people who will listen to us have called, text. Thank you so much. I'm glad you called it. What should we do now? Now they're following the advice because it's my job. It's his job as the head of Social Capital CEO to move his investors' money, right? And if we don't do a good job, it's our fault. But they don't bail us out. They're not going to bail us out. I mean, technically we're a hedge fund and an investment company, so we can pull it, but our capital is not over $1 billion. We don't move the market, right? We're a mom and pop firm. So these other companies, why are they too big to fail? Oh, that's right. Because as you heard him say, when they go bankrupt, what happens is people don't get fired. Actually, the investors in the company, as in the employees, get more money back. But if the government bails them out, right? If the government bails them out, then they can fire everybody. Now they can fire everybody. And you heard that anchor talking about moral. Moral is not letting 16.7 million people get laid off and then giving them $1,200. Moral is giving everyone $250,000 equal share. That's moral. Not giving the banks $4 trillion and then watching them tell small businesses no. I mean, what's up with the banks? Do you think the banks are the crooks? Well, I got this thing from XRP_Crow at Stidas, right? He plays something here, and I've seen this before, maybe play it again, but all the banks are broke, and this is what's going on. I want you to listen. This is from 2013 from the European Parliament. I'm trying to play it. Maybe I have to reload this page. Let's see. Let's do a quick reload. And then we should get a status update, and it should play. Here we go.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years. And that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
Hey, I can't think of a better way to end that. Right? So, hey, there's a scripture here that I always have to say. It's Matthew 6:24. You cannot both serve money and God. You will love one and hate the other. Right now, the bank's God are money. That's their God. They don't care about the people. They're going to crush us. And I don't think I actually follow him. So let me give him a follow real quick. Let me see. There it is. Give him a follow. So, boom. The banks, if I did this, you did this, we go to prison. But the bank people don't go. They actually steal the government's money, and then they steal your money. It's crazy, right? Well, that's the end of this episode, guys. I hope you guys are having a good day. Please let me know what you think, man. Thank you guys for who partners with us. Message us. Again, you can find us on Apple Podcasts, Breaker, Google Podcasts, Pocket Cast, Radio Public, Spotify, and of course the Anchor platform. If you have made it to the end of this video, please like this video. Subscribe to us. I appreciate it. Hit us up on Twitter at New Creation Cap. Also, on our podcast blog, which is publishox.com, you can find all of our stuff. Of course, this is your boy New Creation. This is your boy Christian Israel, and you are listening to the New Creation Capital Podcast, a place where we discuss what happens in the world today, where we talk about stories that focus on current events, the stock market, and digital assets. As we like to say here, make sure you buy low and you sell high. This is the new you, a new future, and a new creation. This is the end of episode 21. We are 21 today. Woohoo! All right, guys. Until next time, guys, peace and love. Later.